What's up, YouTube? About a week ago, I asked you guys what kind of video you want to see, and the answer was the best REITs to buy right now. So I decided to make a video about my favorite REITs that currently are in my portfolio. The main reason why I like REITs is because of the dividends they pay. All REITs combined represent around 21% of my total portfolio. In this video, I will show you my favorite REITs, which are Arbor Realty Trust, Realty Income, Stag Industrial and Ready Capital. I do own these REITs for a really long time and I didn't add shares for a long time as well. But with all these stocks going down in the past weeks, it might be an interesting opportunity to buy some new shares and collect the dividends. I'm very excited to see what you guys think about these REITs, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analyses every week, where I will tell you everything you need to know about the stock market. First company on this list is Arbor Realty Trust. This is also the biggest REIT in my portfolio in terms of value. They represent around 8% of my total portfolio. Arbor Realty Trust is a direct lender providing loan origination and servicing for multifamily and single-family rental portfolios and other diverse commercial real estate assets. Around 91% of the portfolio is invested in multifamily homes, and that's something I really like because this type of real estate is growing in high amounts, so that comforts me a lot. Since 2016 the revenue is going up quite fast, so that's also a good thing, especially since the revenue is only keep on growing. A thing that I don't like about this company is the amount of debt. Right now, ABR has only 350 million in cash, while debt is at 13 billion. So that's something you want to keep an eye on. The last thing I want you to show are the dividends itself. Right now, ABR has a dividend yield of 9.4%, which is insanely high. The 5-year growth rate is sitting at 16%, and when we check the payout ratio breakdown, we see that based on the 12 trailing months of earnings, payout ratio is at 71%. Based on this year estimates, it's at 84%, and on next year estimates, it's at 82%. Based on free cash flow, it's sitting at 61%, so this looks all good to me. As I already said, ABR is my largest REIT in my portfolio, so I'm collecting the dividends, reinvest them to buy new shares of this REIT. Next on this list is Realty Income, ticker symbol O. Realty Income owns roughly 11,000 properties, most of which are freestanding, single-tenant, triple net lease retail properties. Its properties are located in 49 states and Puerto Rico, and are leased to 250 tenants from 47 industries, well diversified. Recent acquisitions have added industrial office, manufacturing and distribution properties, which make up roughly 70% of the revenue. Realty Income is known for the stable dividends and to reward investors over the long run. Since 1994, when Realty Income becomes a publicly traded company, they have a 15% annual compound average return, while the S&P has a 12% return. They grew the dividends at a compound annual growth rate of 4.4% since 1994. One of the things that people don't like about Realty Income is they are focusing on retail locations. Around 78% of their total portfolio is invested in retail and only 16% in non-retail. One of the things I really like about Realty Income is that they are expanding a lot in the last couple of years, especially with the added focus on Europe. In this graph we see the industry breakdown of tenants. I think this is well diversified and no industry is bigger than 10%. Another thing that a lot of people like about Realty Income is the fact that they pay monthly dividends. So instead of receiving dividends once a quarter, you will get paid every month. Realty Income has a dividend yield of 4.28% and grew the dividends for 25 years in a row. The 5-year compound annual growth rate is sitting at almost 4%, which isn't the highest to be honest. When we check the payout ratio breakdown, we see that based on the 12 trailing months of earnings, the payout ratio is sitting at 209%, which is obviously too high. But based on this year estimates and next year estimates, it's at mid-70s. Based on cash flow, it's at 133%. So for now, I don't think I will put my money in this REIT, but I will collect the dividends and, of course, reinvest them. Third REIT on this list is another monthly dividend paying stock, Stag Industrial. This stock is down 30% year to date and the most interesting one to buy right now. So what does Stag do? So Stag Industrial is a real estate investment trust primarily involved in the acquisition and operation of single-tenant industrial properties throughout the United States. The vast majority of the company's real estate portfolio is comprised of warehouse and distribution buildings. In the first quarter of 2022, they acquired 8 new buildings and earnings were in line with the expectations, and FFO looks good to me. The core FFO is up 21% versus 2021. Revenue is going up quite nice and steady, which is also a good thing. And when we check the margins, we see that margins are also going up quite nice and steady. When checking the dividends, we see the dividend yield is at 4.48%, and they have a 5-year compound annual growth rate of almost 1%, which isn't the best to be honest. They grew the dividends for 7 years in a row. A thing that investors like about Stag Industrial is that they pay monthly dividends, of course. Based on the trailing 12 months of earnings, payout ratio is at 112%, which is too high, but based on this year estimates and next year estimates, it's at roughly 65%, which is a good thing. Based on cash flow, the payout ratio is at 56%. Last REIT on this list is Ready Capital, ticker symbol RC. Ready Capital is a real estate finance company. It acquires, manages, originates and finances small balance commercial loan to purchase small multifamily, office, retail, mixed use or warehouse properties. In this chart we see the property breakdown. Multifamily is representing 58% of the total revenue. Retail 11%, office 9%, mixed use 8% and other is at 14%. Right now, RC pays a 11.7 dividend yield and has its 1.6 compound annual growth rate over the past years. So dividend yield is really high. When checking the payout ratio breakdown, we see that based on the 12 trailing months of earnings, payout ratio is sitting at 72%. This year estimates is sitting at 84% and next year estimates is sitting at 91%. Based on free cash flow, it's sitting at 88%. To be honest, I still think of selling this REIT, since earnings might not cover the dividends in the future. I have this REIT for a long time and it might be even one of the first REITs that I bought. In this period I collected a lot of dividends and I'm also up around 50% in stock price, but this is something I will decide in the coming weeks. So my final conclusion is that personally I like Stag Industrial the most. Right now they pay a steady monthly dividend and since this is one of the smaller positions I have, I might buy the stock in the coming weeks. But remember to always do your own research and never fully trust on what I or on YouTube say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.